If we look at the US stock market, we can see that stocks have risen to new highs. But take a look closer and you will see that there are two specific stocks which have risen above the rest. But what usually happens in situations like this? You came here for the truth, so let me unveil that for you. Today we're going to look at the US stock market. I want to show you China. I want to look at technical indicators, so much more. Let's get into this by beginning with this chart here. It might be a little difficult to see. I'm going to zoom in on the left-hand side, and I want to highlight two specific stocks. That is Amazon and Apple. They are part of the Fang Stocks, and the Fang Stocks have been outperforming the market in general. They have really been carrying the weight for the entire US stock market. The Nasdaq has been doing very, very well here. We can see that stocks have been hitting new highs, but it has been on the backs of the Fang stocks, just really carrying the weight there. Now, taking a look at Netflix, for example, which has been a very, very good performer up until this point, look at the difference in between Amazon and Apple and Netflix. This has been something of really, truly an anomaly, because you can see that it is just two stocks, even among all of the others here that have really done well. And what is it? Is it because Amazon, they sell many products online? Is it because Apple sells lots of phones and lots of computers? Or is it quantitative easing? Is it really central banks intervening in the markets, buying up the stocks of these companies, and then you have the hedge funds, the institutional investors, and then the retail investors going in after that? Many people would say, who cares, as long as the stock keeps going higher? But it is, and definitely does, need to be understood the reason why this is happening. Many people refuse to acknowledge it at all. All right, so you could see that on the chart right here, and basically where it's going, where it's headed in this time frame. Might be a little difficult to see, as I said, but that just shows us where the Fang stocks have gone, not just in this short period of time, but looking at it from 2009, March 2009, it has really just gone up ever since. All right, now we take a look at this. It's just something that I wanted to point out. I don't put much weight on this, but it's the Citigroup panic euphoria model. All right, we could see that where it has gone just recently in the last few months, where it had peaked previously, where you see that word euphoria, that was the beginning of the year, and then the market tumbled down after that. However, we're nothing near where we should be at this time, because you can see it's moving up to that euphoria standpoint, and we need to go beyond that. We need to be able to find some level of realistic behavior in the market, but that's not happening because of all the quantitative easing. All right, and then take a look at this. August is typically the busiest month for buyback executions. You can see that corporations right now are buying back stock like never before. 2018 is a record year for stock buybacks. In fact, it may be double of last year. That's how intense they are actively going into this market and buying back their stocks. These companies are flush with cash. These companies are trying to be able to continuously push these stock prices up. One of the ways they can do that is by doing stock buybacks. So you can see here is showing us 13%. That's the percent of the annual corporate repurchase spend. So they're going to do 13% worth in this month alone historically. So we'll see how it all works out, but that's probably the case. We can look at it in comparison to the rest of the month, and it will continue on, of course. Doesn't really matter if it will be 13%. We know that it's going to be a lot of money being used to push up these stocks. All right, then we have the Buffett Indicator. For those who don't know, that's the Wilshire 5000, which is basically all the US stocks, and the GDP. So we take this ratio and we come to a conclusion of, how hot the stock market is right now, how overvalued it is right now. And you could see that the peak on the left-hand side is the dot-com boom, And then we have on the right hand side our current market. It has gone 136.9% in the dot-com boom till today 138%. Is this the only indicator to go by? Absolutely not. But it just gives us an idea of the stock market to the GDP and how that's doing. And we far surpassed the financial crisis, the housing crisis. We went way, way beyond that. And now today we can see where we're headed. It will probably go even further. There's no doubt about that. But what is the cause? Is it real fundamental, products and services and industries? Or is it quantitative easing? Is it central banks that have been doing this? I would have to say the central banks might have a thing or two to answer for in this case. Looking at the caution signs, the volatility divergence signal triggered for the fourth time in 20 years. So this is the S&P 500. You're seeing that the SPX touches 52-week high while the VIX closes at least 40% above the 52-week high. This just showing us here over the last few years how this has really progressed. All I know about the VIX index is that it's supposed to show us the volatility of the market, but it couldn't be further from the truth because we have the volatility index and the Fed admits to have the actual short on the market. They admit we have a short position on the VIX. So of course it is manipulated and nobody should be fooled by what is happening. Then we have this, last but not least, wanted to touch on this, China's market. So you can see where it's gone, basically down 24% over 2018 from the point at which it peaked up until now. That is officially a bear market on the Shanghai Composite. Looking at this as just one market. So many markets out there are doing terribly. We could see so many currencies doing terribly, the emerging markets. Now compare that to the Fang Stocks. Totally different. Completely different. But why? They have not been benefiting from the quantitative easing in 2018. They have not been able to receive any of that money printing. Now, the Bank of Japan, for example, could buy up all the shares of all these companies in Japan, and they certainly do. The People's Bank of China could buy into these corporations, and they certainly do. But nobody intervenes like the Federal Reserve to print up money and buy up all of that debt. The ECB has also been one to get directly into the market by buying up all the corporate debt, by using all of their different schemes, asset-backed securities, and all of these purchases that they've been doing. It's unbelievable to see that. And despite the fact that they had said, this is never going to happen, we're never going to allow this, they of course have done it. Anyway, that's all. I just wanted to compare the two, looking at the US stock market and then breaking it down further into the Fang stocks, breaking it down even further into Apple and Amazon just recently. And the market breadth is really, really becoming a big problem that a lot of people have yet to acknowledge. That's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel. I do appreciate that very much. And don't forget to hit that subscribe button. When you hit the subscribe button, it is you joining nearly 150,000. We're heading for that number this year. 150,000 people all over the world. This is the most global show you will ever find. I cover information from literally every corner of the world. So definitely join me here. Hit that subscribe button. And I'll see you on the next video.